Hey, good morning traders, 26th of October, 8:16 here in London. My name's Marco and at Trade and Train. I'm going to run you through this week's watch list. If you stay until the end, you'll see a comprehensive breakdown of all the charts that we're looking at, that we've sent out to our members, and then something for you to keep an eye on throughout the week. And there's some potential very handsome returns here. So very simple. Let's start off with the dollar index, see what we can see from the higher time frame. I'm just going to bring in some drawing tools right now. So essentially the higher time frame is picking out this ascending channel, which you can see we've had 3 touches coming through here, which has been going all the way back to early 2011. The market peaked through here 2016, again tried to test it late 2019, and then since then the dollar's been on a bit of a decline, especially through the pandemic. We had that surge up and then it's just sold off right down into those early 90s. Now the difference here is that as of last month, September, we saw a big bullish candle taking out the previous high of the previous month and also exceeding the low. So we call that bullish engulfing candle, meaning the probability if we break that high is we'd expect to see some further momentum. Now, due to some fundamentals, i.e. stimulus packages, whether we would actually see further acceleration and a lot more moving dollar strength is a different topic altogether. However, we do expect to see some seasonal bias throughout October, leading up to the election, through the election, and then towards the end of the year that dollar strength might peter out. How we can look at trading that, well, we'll obviously run through some alternative charts, but just looking at the dollar index, I'm going to drop down to the daily chart, and here you'll see how the market has been coasting lower, but not in an aggressive or an impulsive manner. It's very corrective. We then saw the market break out, create a new high, and then since then it's done the same again. We've been selling off slowly. We've pulled back into these near-term lows. However, once we've broken through those, the market always likes to penetrate lows before we do get that next impulsive move. So a key high to watch out for here is going to be around this 94. But for those short-term day traders, you know, if we break Friday's high, then we can be looking for impulsive moves and corrections to get long and trade up towards 94 before the next sort of dollar impulsive move comes in. Another market to look out for, the S&P. So this is how we're looking at sort of correlating moves and where the strength of the dollar or the weakness of indexes, which could move to money flow into safe havens. So a key area to watch out for is around this 3400. Now the indexes have started off with a bit of a sour note, really. It's been a predominant selling of the indexes since the markets opened. I mean, the S&P is only down just under 1% right now, but the Dow Jones was down just over 1%. The Nasdaq was down just under 1%. So it'll be interesting to see how these markets do play out as the US comes alive later this afternoon. So we'll be watching to see this area here around the 3400. If 3400 breaks, then expect to see that money flow into safe haven currencies, the Japanese yen and the US dollar. A break above here, and obviously not only is that good for indexes, it's probably going to put a bit of strain on the Japanese yen. You will see those markets selling off. If we remain above 34.50 and we stay positive through this period, it also has a positive outcome over 84% of the time for the current US president to remain in power. So we can see those potential opportunities there. But one of my favorites at the minute for some serious returns would be looking at silver. We see further downside on silver short term before we look for that next seasonal move. And something we're looking at here is, I'm just going to pull these lines over. Okay, so let's just remove this. So something we're looking at is how price has moved since we had the spike highs, and then we consolidated, sellers gained control again, and then we've come back into this bearish flag. Last week we failed to take out the previous highs here, and now we've seen an initial selling of silver, and we're retesting the ascending trend line or bear flag on the higher time frame. So our expectation is if price breaks this trend line, we'll be looking for continuation down towards at least 21.5 and then potentially even lower down towards 20. The purple vertical line here highlights the US elections. Now from this point I would expect to see price remain relatively low, and then through this period here, this is where we expect to see our precious metals have a seasonal bullish period. So somewhere between third week of November and middle of December, I'll be looking for those opportunities to get long. So as soon as silver comes down here, we see a face double bottom or a higher low, I'll be looking to trade those long, and I'll be looking for that as a long-term move. I do see precious metals as a good investment and a longer term hold, but expecting more downside in the short term. Moving over to the euro, let me just remove all drawings here. Euro is quite interesting because this currency has remained strong throughout. Okay, there we go. So I'm just trying to put these levels in for you. So things that we were looking at initially was when the euro came up into this area, exceeded 119, we had a little false break, and we actually thought that this was going to be the top and the market was going to penetrate and keep moving lower from that point down towards 1.14. That move never played out, so we've been quite patient. Something we're looking at right now is, will price reject where we currently sit and move lower into this area, or are we going to push one more time higher back up into the initial areas we were talking about up here and create that double top? So a lot's going to be watching through this area here, and whether price is going to meander lower, break through, then we can look to trade it into here and lower down to 1.14. We are bearish euro longer term, but we wouldn't be surprised if price did rally up into 1.2. In terms of looking for trading opportunities like the dollar index, if we do see a break of this ascending trend line here, then we expect further downside. Where we currently sit, it's a bit of no man's land. I'd be more inclined to sit on the sidelines and either wait for price to run into this area and looking for shorting opportunities, or for price to break down through here and then trade with the trend, short-term trend, into 1.16 and then 1.14. Sterling, well, you've got to be very careful with this market, traders. We do know that it is highly dependent on Brexit. It is a fundamentally driven chart at the moment. I mean, the technicals, that is something that will always play out, and the fundamentals will just take you to a structure point quicker based on whether the facts are good or poor for your trading decision. The fact is that whether it's positive news for Brexit, you're going to see big spikes. If it's negative news, you're going to see a big sell-off. So when it comes to trading pound, our advice is, the one thing you can control is the risk that you put into the market. You can't control the outcome. So please be very, very wary of pound and where it currently sits. If I'm just going to remove some of these right now, I'd be looking and saying, right, well, what do we see here? Well, you've got a very nice ascending channel being formed, or bear flag. So before you trade that, do you want to get caught in this area here? And the answer is no, you don't want to get caught here. If you're going to trade this sensibly, you're going to be looking for the market to come down into here and then see if you get a rejection. If you do, then that's going to be, pound strength. If not, if price breaks through here, look for a correction, and then your target is initially going to be 127s, and then you look at the bigger patterns and see where the next market move is. So ultimately you want to be very, very cautious where price sits. You want to wait for price to pull into structure and then trade accordingly, and whatever your rules may be. So if you don't have any rules and you don't have a trading plan, please seek advice. And if you're looking for help with trading plans, give us a shout. Drop us an email to mark@tradeandtrain.com or james@tradeandtrain.com, and we'll give you guidance on how to set up a trading plan. So that's it for pound. We'll take a look at two more charts. I think we'll do Kiwi, because this one is potentially setting up not just for intraday traders but for end of day traders. So if you are one of those end of day traders finding that the market isn't really giving you too much to shout at the minute, this could be one of those charts. So the market double topped up here, we got the neckline, price broke through, and it was looking really nice for a potential retest, and then breaking through and coming down to test this neckline where we can see the left shoulder over here, and then we're forming a corrective channel here for the right shoulder. So how can we look at trading this? Well, where we currently sit right now, the market has come in, it's tested not once, not twice, not 3 times, but 4 times now on this ascending trend line. Now we've had momentum run out of each candle. So you've had a big impulsive candle, a smaller impulsive candle, a doji candle, and now we've got Monday's candle. Don't take too much into account of today's candle because obviously we've only seen the Asia session without the US opening. So let's take a look now at just dropping down the time frame and seeing what opportunities we could look for. So if we drop down to the hourly, you can see how this market has rallied into our upper part of the channel, but whilst forming a rising channel or rising wedge, whichever technical term you prefer to use. You can see we've got 1, 2, 3 attempts here, got 1, 2, 3, and we're waiting for the 4th. As soon as this breaks, then we'll look for a little corrective pattern, and then there's our trade down into 65.70, which is about anywhere between an 80 and 100 point return. For those end of day traders, well, you could use the daily swing low and daily high of that previous day's candle and target, which essentially is going to give you a decent return roughly. In fact, let's tell you exactly. If we just go back to the daily chart, if you used the daily candle with a short sell stop position based on Friday's high and low, we're talking roughly about 1.35, so 135% return on investment based on that one candle trading into structure support. We do believe though that there's further room in it to head all the way down towards that 65.20 area at least, but trade according to your management rules. Last but not least, we'll take a look at Euro Aussie. Now be wary on this one because it is potential. It could have, technically speaking, we could potentially see this market rally higher based on the fact we've seen a clear structure point break, then we've pulled back down, we've retested it, momentum's run out of the candles, we've seen a doji, and then Monday's candle is still live. Things to watch out for: if we break it down, just head down to the 4 hourly chart, we can see the momentum is still to the downside. Now if you wanted to trade this and you were looking for that momentum shift, we want to low, lower high, lower low, lower high, double bottom, new high, look for the retest and go long. So very, very simple. Play it according to the rules. Now just remember, if price does break back down underneath support, then this area here was a false break and looking for that momentum shift to continue lower. Alright traders, that's it from myself, Marco, and here at Trade and Train. If you did like the information we've put out today, we'd really appreciate it if you hit like, share and subscribe, and we look forward to seeing you with our content tomorrow. Cheers.